Hi, good morning, everyone. This is Nabil Mattar speaking, Premium Client Manager from IG. Thank you so much for joining us this Tuesday morning again. Quite a lot of things happening in the markets. Let's get down to it. Before I start, let me just go through a quick disclaimer. So IG provides an execution-only service. Whatever that I say in this webinar is for education purposes only, and IG does not take any responsibility for any use that may be made of this information and for any consequences that result. Okay, so moving along. So for those of you that attended the webinar, a couple of times, how I always cover the market is number one, I look at longer term charts, starting from the weekly and daily charts to form my bias. And after I form my bias, I try to look for evidence in the market, to try to plan the trade. So that's what I call stalking. I did a little presentation last Saturday morning with Michael Covell. So for those of you who were there, thank you for coming. But basically, that's how I look at markets all the time. Very similar. I do it every single day, every single week. So hopefully you guys can benefit from that. So looking at the S&P weekly chart, nothing much has changed for the past few weeks. Basically, we are still in this channel, still in a very bullish uptrend. You can see those circles I drew. I mean, the tricky part was during the October period whereby it broke a new low, but after that, it just continued straight up. Nothing much else we can infer from the weekly chart, so let's move down to a daily chart. Now, daily chart, still very bullish. Okay, so the main thing that happened, I guess, is I just call it a retracement. All right, 3 days down, back into a support level, but basically still very bullish on daily chart. Okay, so for those of you who are swing traders, daily chart bullish, weekly chart still bullish. Let me look at the 4-hour chart. Now, 4-hour chart is a bit slightly tells slightly different story. So what we can see here is just draw. Okay, we can see that it was consolidating for the past 1.5 weeks or so, all right, around the 2065 level to about 2075, and I call this, it's just very lazy trading, all right? I mean, it's just slowly moving, inching its way higher, and then recently I think a bit of profit taking, a bit of news, and then it came down, all right? Nothing much really happening on all the indices. So I would say that, whenever I see the market, being exhausted after a very strong uptrend or downtrend, I'm more inclined to think that it might consolidate. So that's where I take my drawing tools and try to see what kind of support and resistance I can look out for. As of now, let me just delete some of the lines that I drew. You can see that on the 4-hour chart. Okay, if you can't see much on the daily or 4-hour or weekly chart, right, this way you can zoom into a shorter term chart, to try to see whether there are any clues or any more evidence to support your trade plan. Now, the 4-hour chart, okay, this line here, the 2056 area here, all right, this was quite a good support that was broken. Next level you want to look out for, okay, this is the first level, okay, this was period resistance, market was slightly supported and then it broke through. So this candle here, all right, was a clear break below this support level. Now, what we are looking at is most probably the market might come down to this support level somewhere here, basically based on the touches here, here, and here. Okay, so most probably it might come back up. The level is probably around the 2040 to 2045 level. And then from there we can see whether there's enough bullish evidence, whether the bulls will try to take it up again. Okay, again, very important thing when we're talking about support and resistance, especially in a higher time frame like daily and weekly, we are always talking in terms of a range, not a specific price. Okay, so just take a look at those levels here. Because the 2055 level was broken, I'm more inclined to think that it might come down to test these levels again, support level, before it might start going up. Okay, but there's not much things that we can infer from daily chart. 4-hour chart it might be a start of a downtrend, but I'm more inclined to see where this is support and resistance. Okay, because overall longer term chart is still bullish. Okay, so that's the S&P 500. Again, if you guys want me to go down to another lower time frame, please shout out, yeah, so that I can so that I can look into it. Okay, because I'll just cover what I'll see for the week. So if you want to plan something on lower time frame, just put it in the question box and I'll go to it. Okay, next thing I want to look out for is the DAX, the German 30. Okay, same thing. DAX weekly chart, still bullish. Okay, we can roughly tell that on this weekly chart. Oh, sorry, it's a 4-hour chart. So sorry. Okay, so this is a weekly chart. So still bullish. We can see that it broke out of this really nice little channel here, broke a key resistance level at around the 9,800, and now is testing the where was this May-June period high around the 10,000, around the 10,020 level. Okay, so weekly chart, no two ways about it, is just bullish. Moving down to the daily chart, bullish as well. In fact, it looks even more bullish than the S&P. Isn't it? S&P is a bit consolidating, but the daily chart right here is just bullish. Now the question here is, I mean, even though your weekly chart and analysis is bias is bullish, your daily chart is bullish, it does not mean that you just close your eyes and buy. It's still very important to do your trade planning. All right, trade planning is very important because right now we are quite close to resistance. So you need to ask yourself, even though you're bullish, where you want to take the trade from. Are you targeting an intraday trade? Are you targeting a longer term trade and things like that? Okay, so daily and weekly, it looks bullish. It's just that there's not much evidence or there's not much things to look at if you want to plan a trade. So that's where you can go to a lower time frame. So let's go to 4-hour chart. Now 4-hour chart, a bit more things to look at. So we know that the daily and weekly is bullish. So the bias is bullish. If you're a trend trader, you want to look at buying. Okay, if you're counter trend, it's another story altogether. But basically, daily, weekly is bullish. If you are intraday to swing trader and you're a trend follower, then you're looking for support levels to buy. So what we're looking at, the 4-hour chart right now, you can see this little trend line here. Let me take this circle away first. Okay, so right now you can see this trend line here being supported 1, 2, potential 3 times. Little resistance around the 10,000 level. Of course, if it breaks higher, most probably we are looking at the testing the weekly high again. But right now, this trend line seems to be quite respected. Okay, so have a look at this level here with this trend line as well as the 9,900 level. All right, I mean, it has been in this tight range for the past 4-5 days, between the 9,900 to the 9,990 level. Or we'll call it maybe close to 10,000 level. So it's just been, like I say, I mean, most of the indices doing nothing much, just meandering between. So look out for the shorter term range levels to see where it will break out to either side. Okay, again, if it breaks below the 9,900, it does not mean bearish, especially if you're looking at a daily or a weekly chart perspective. Okay, however, if you're looking for intraday, yes, maybe you can call it bearish and try to take a short to another support level. But if you're a trend follower on the daily and weekly chart, a break of a 4-hour short-term support does not mean bearish. Okay, so I'm just using different time frames to try to explain to you what might happen. Okay, so if you're a scalper, if you're a short-term trader, again, shout out so that I can look at short-term charts for you. But as the DAX, basically, we're just hovering around this range, and your break of the trend line below 9,900 will mean that maybe it wants to make a move lower to another level of support, maybe back to the 9,008. All right, so that's for the DAX. So Hang Seng. Okay, a lot of my clients are calling me to look at the Hang Seng recently. Now the Hang Seng is really just consolidating. I think I drew this circles and arrows last week during the webinar, and nothing new basically, nothing new at all. Very, very similar. So just consolidating into this symmetrical triangle, and you can see that this the resistance of this trend line is basically 1 touch, 2 touch. The support has many nice touches, 1, 2, 3, 4, and we might look at the potential 5th touch around the 23,000 level if the markets come down. So no trend. Weekly chart is just consolidating. Okay, I know it seems a bit more bullish 2 weeks ago, but right now, based on the 2-3 candles, weekly candles, it seems that it's just consolidating and really not much of direction. If you look at the daily chart, okay, same story. All right, you can see the kind of price action. One day really, really bullish, So 1 week really bullish, another week the trend totally reverse. Okay, and then it starts consolidating. All right. Now, if you notice the circles I drew, I think this was the circles I drew last week. It's just a bit of applying price action theory to the market. So if you see that it came down here, okay, and then it came up, it made a higher low compared to this low, okay, another higher low, all right, but still within the same high because this was a previous high, right? This one here was a previous high. So no higher high yet. So this whole area here is just higher lows, but it's the first sign that the market might break upwards. So when it broke to 23,500, this was the first higher high. So higher high, higher low, higher high. So all good to go on the upside on the daily chart. So if it made another higher low here, let's say it did something like this, and then it pushed up, we can confirm that it is on a nice uptrend. However, we all know that that was not the case. I think what happened in November 20th was that the whole thing tumbled and reversed, and this low was broken by this low. So when you see a start of uptrend followed by a new lower low, okay, one thing's for sure is that uptrend is gone. Now, right now, we're looking at either a consolidation or a start of a downtrend. All right. So what we saw is that the lower low was confirmed by a lower high. Okay, I'm comparing this high to this high, so lower high. And right now, it might form another lower low, another lower high, potentially, okay? I'm so sorry. But basically, if it does continue the downside, basically, don't forget how it looks like on the weekly chart. It's basically coming to touch the bottom of that symmetrical triangle consolidation back to this level here. Okay, I'm not a big fan of Hang Seng because I don't like consolidation markets, because it's just trading around support and resistance. I mean, it might be a cup of tea, but always be mindful of the longer term charts. Okay, now okay, Mr. Rama has a question on Singapore blue chip. Let me just have a quick look. Okay, Singapore blue chip. Okay, this is a weekly chart. All right. As you can see that the weekly chart has been nicely supported by this trend line from 2013 and it's made a push higher. And right now there was a bit of resistance. It's quite a strong resistance level around the 378, 379 level, and the market made a push down. Now weekly, I wouldn't call this a uptrend. It's just consolidating. Okay, it's just consolidating. Now this level here, let me just put your attention across to this level here. Now this is a weekly resistance level, isn't it? And it's quite a strong resistance level. I mean, if you look at the touches here, here, here. So the 379 level is quite a good resistance level. Okay, there are two potential scenarios that might pan out. The market might start moving downwards from here and back to this level here. And if that happens, you can sort of assume that it's consolidating, and it will look exactly like the Hang Seng because you can connect the points here and you can say, okay, it's also consolidating in a symmetrical triangle. Okay, now this is the first scenario. Second scenario, now the previous weekly candle, all right, it is a I mean, this is quite a bullish pin candle. Of course, if it closes like that, it's a bullish pin candle. But the second scenario is basically it hits the support, which it has done, and it breaks a new high above the 379, and it breaks the other previous high here, which is around the 380 level, and it starts going up. Alright, so these are two potential scenarios that I see. Okay, but if you are bullish, just be mindful. Okay, let me just go down to the daily chart. Oops, sorry. Okay, if you are bullish, just be mindful that this level here is quite clear on the weekly chart. On the 379, 380 level, it is quite a strong resistance level. So if you are buying from any of this support level, just be mindful of how price action reacts to the 379, 380 level. Because don't forget, if that price, I mean, if the resistance is still strong, and if the bears push it down again from here, then most probably we're looking at that symmetrical triangle consolidation pattern on a weekly chart. which looks exactly like Hang Seng. All right. For it to be a clear uptrend, it needs to break this level. All these resistance levels, the market needs to break through and push up further. And then you can talk about a good uptrend. Now, this illustrates my point of why buying a support and planning your trade is so important, because we all know that this is nice support. Okay, so I'm just looking at the daily chart. So this is a pretty good support levels here. Okay, around the 370 level. Yeah. Now, if you, let's say for example, if you bought it a nice support here and it starts going up, now you know that this whole level here, there's a lot of resistance, a lot of bears there, and there will be a fight over here. But if you bought it at a good support level, once you get there, I mean, the good thing is that you're already locking in profits, isn't it? All right, you can either, you know, take some profits off the market, or you can, you know, move your stop to break even, or I mean, the main thing is that you are in a good position already. So whether it breaks new high or it comes down, at least you, I mean, your risk is being managed. Okay, but if you took your long near the resistance, then it's quite a tough place to manage. All right, because as a retail trader, I always try to follow the market, and I do like to enter in levels whereby it's like a war zone, whereby the bulls and bears are fighting. I do like that. Okay, I basically like to enter at clear support and resistance levels. Okay, so this is the Singapore blue chip analysis that you might want to look at. Yep. Sorry, Mr. Rama, is it at a resistance and failing to break 376 would be a good price to short? Failure to break 376. 376. Oh yeah, okay. Okay, two level of resistance here. I mean, I mentioned this is the weekly resistance level. This is a shorter term resistance around 376. Okay. It depends on your trade plan. Okay, right now, the weekly chart, all right, is still consolidating. All right, the daily chart here, oops, sorry about that. Okay, so weekly chart is still consolidating. The daily chart here is a bit mixed as well. I will use this key support level, these two levels, as my guide. Of course, I mean, if you want to short around the resistance level at 376, most logical stop loss would be above this resistance level, isn't it? Because if it breaks this key resistance level, most probably the bulls will come in and push it up further and further. Let's take a look at the 4-hour chart. Maybe give it a bit more details. Now, we know that 376 is resistance on shorter term charts, right? That's based on your analysis. Yes, correct. It is a shorter term resistance, but if you look at this big bullish candle, I mean, how comfortable are you to short? I don't know. It depends on your trade plan. Now, what I do, I mean, it's the same thing like I presented last Saturday, is I like to wait for a lower time frame to confirm my trade plan before I take, or confirm my bias before I take any shots. Now, this is quite similar to how gold and silver is actually. So even though I'm bearish, right, if there's a big green candle like that, I'm a bit cautious. Alright, because this is a very big bullish engulfing candle. It is resistance, right? But there's no signs that the market is showing weakness here yet. At least in the 4-hour chart. If you look at the 1-hour chart, same thing. Now, if you look at the 1-hour chart, now how bearish is this? How bearish is this two big green candles? So, I mean, depends on your trade plan, but I'll be a bit more cautious when the market, you know, retraces like that. Okay, because I like to see clearer direction before I do anything. So your analysis is not wrong. I mean, going back to the daily chart, 376 is short-term resistance. Okay, the weekly chart analysis, which I spoke about, the consolidation into a potential triangle might happen. Okay, so this might happen. Keep this in mind. This is a weekly chart. Okay, but right now the behavior of the 4-hour chart and the daily chart is just something that I would rather wait out and see first. Okay, even though that this level here is resistance. Okay, so it depends on how aggressive and or conservative you are as a trader as well. Okay, just because of how it retraces. Alright, it's a big strong candle over here. Okay, so always think in terms of risk reward, and when you have a bias, eyeball a key level and wait for the shorter term charts to confirm your bias before taking a trade. Right now, the shorter term charts is based on the candle is very bullish. Okay, so that's how I trade. Yep. So okay, let me see. Sulian, you're saying clear path of least resistance, bullish daily short-term trade. So Sulian was saying that this might be a short-term trade to the upside. Okay, we are at resistance right now. Okay, so I'm not trying to be flimsy here, no, but I'm just trying to say that trade planning is all about risk to reward. It's all about probabilities. Now, Mr. Rama has a bearish view, is fine, but again, I'm not comfortable because of how the retracement candle looks like. Sulian has a short-term bullish view. Yeah, she can be right as well, but again, right now we are kissing resistance at 376. Do you think this is the best place to take it? Might not be, right? Because again, I'm a pullback trader. So even if I want to take a short-term bullish trade, right, I'll let it pull back to at least a short-term support level first. Short-term support level before taking it, and hopefully it goes up like that. But I'm very clear that this 376 level here is key resistance. Alright, after 376, we're talking about the 379, 380 level. Okay, so always plan the trade. It's very important. You can be bullish, but it does not mean that there's a trade to be taken. Or you can be bearish, it does not mean that there's a trade to be taken. It's just planning it. Planning is very important. Alright, yeah, Mr. Rama, neither bullish nor bearish. Yeah, I mean, you can say sort of it, but I always, if the short-term charts are messy and you don't know what might happen, always have a perspective on what's happening on the longer-term chart. So weekly, I'm looking at something like this. This is a potential scenario, so keep an eye on it. Okay, now in my first few years of trading, I always get mucked around the shorter-term chart, the 15 minutes and the 1 hour, and after some point in time, I got really angry myself because my analysis is quite spot on, especially in longer term charts, but it's because I get messed up or I get muddled or I get confused by what the short term chart is trying to do, and I lose a lot of money or lose a lot of pips and points on those shorter term charts. So if you're not sure, you might want to step aside, focus on the longer term charts, see what's happening. Okay? Okay, so that's a Singapore blue chip. Alright, any other questions for indices? Now I'll move on to Forex. Okay, no? Alright, so let me move on to the Forex pairs now. Oh, Nikkei, sorry. Nikkei, yes. Nikkei 225. Alright, so the Nikkei, now Nikkei is quite bullish. Yeah, not quite bullish, very bullish, sorry. So on the weekly chart, you can see that it's supported a nice trend line, broke a key resistance after BOJ announced a quantitative easing, and it never looked back since. Okay, resistance level, I really don't see much of a resistance. Let me see. Okay, I got to go to a monthly chart just to try to plot some form of resistance. Okay, based on the monthly chart, I think this 17. This level might be potential. This level, okay. Okay, based on the monthly chart, right? I mean, based on this touches here, the first level of resistance might be around here, but around the 17. See where we are right now, around the 17,600, and the next stronger level of resistance is around the 18,200 level. Okay, I mean, all these resistance levels are ranged because we're looking at the very long-term chart on the monthly chart. But as far as I'm concerned, even though we know that those levels are resistance, the way price action is moving right now, I don't think bears are in the market yet. Still very bullish on the weekly chart. Okay, on the daily chart, same thing. So what the market has done is that it made a very bullish push upwards, consolidated for a bit over here, and right now, if today's candle closes like that, right, closes above the short-term resistance of 17,500, there's every chance that it might be a breakout to the upside and the market might push higher. If the daily candle closes like that. If the candle closes below, just like the previous daily candle yesterday, then I'm not too keen on the upside. Okay, but if the daily candle closes above, just like that, there's every chance that we might make a push higher. Okay, because the daily has been consolidating in an ascending triangle. Now, ascending triangle is shows a bit of bullishness because of the higher lows being made, and if it breaks upwards, chances are it might go higher. Okay, let me take a look at the 4-hour chart. Alright, you can see a clearer picture on the 4-hour chart. So if you draw up the ascending triangle, it looks something like this. Okay, and this is a very clear example of why you need to use higher term time frames to confirm. Look at this breakout here. This was, which date was this? Let me see. This was December 1st. Alright, a 4-hour trader will be very excited by this. Wow, nice daily 4-hour candle close above the key resistance, pulled back long, and hopefully it will go up. But we all know what happened, right? It came down and it started consolidating. But if you see the daily chart, it's just one candle with a long shadow. Okay, which means that this is not a breakout on the daily chart. Okay, so this is a good example of how using higher time frame can help your analysis. So even though if you enter the trade, there's nothing wrong to enter a trade here. Let's say you see a big 4-hour candle break above, enter here. There's nothing wrong because trading is all about probabilities, right? You can't be too sure. There's no guarantees in trading. There's nothing wrong with it. But what I'm saying is this. If it comes back down and you see a daily candle closing, forming that sort of candle like that, then you're more inclined to think that maybe this is a false breakout, isn't it? But having said that, today's candle seems that you might want to make a push again. So again, cross-reference to a daily candle and see how it is. If this is a legitimate breakout, we might see a continued push to the upside. Okay, Mr. Brahma has a question, where will be the retracement level we can look to buy? Now, I covered this last week. Whenever we come to breakout trading, right, this is a bit of theory again. There are two ways to take it. Let me clear some of my drawing tools. Whenever we come to breakout trading, okay, there are two ways to take it. Either we wait for a nice breakout and then wait for a pullback to take a long here, stop loss below the swing. Your targets can be somewhere. I mean, target doesn't matter for this, but basically the stop, you can either take a retracement back to the previous resistance, turn support, or if you are more aggressive, if you see the market consolidating, you can always just put a buy order slightly above the previous candle resistance and be triggered into the market. Okay, but what I'm saying is this: taking it as close to the previous resistance as possible is better risk to reward. Okay, because whether you take it here or you take it here, your stop loss, logical stop loss will always be here, below the previous swings, correct? So taking it closest to the previous resistance has the best chance or highest probability kind of trade. Okay, so how you want to take it depends up to you. For me, I base on different instruments. Normally for the yen pairs or commodities, I like to take it on the break compared to this, because most of the times these markets do not give me a pullback. But in most cases, I prefer to let it pull back. Okay, and the next question would be, okay, you want to take a pullback, which time frame pullback you want to take it on? Again, depends on what you're targeting, what's your risk to reward, what time frame, or what kind of trader you are. Okay, you can take a 4-hour pullback and take a daily pullback. It really depends on what trade you are planning. Okay, but the main thing, you can take it two ways, this way or this way. It's up to you. Yeah, but the main thing is always make sure risk to reward is at least 1:1. Alright, so okay, so this is the indices. I'm going to move on to Forex now. Okay, let me move on to Euro Dollar. Okay, Euro Dollar, weekly chart. Really, since I started the webinar 2-3 months ago, nothing much has changed in the weekly chart. We are just going down for the Euro Dollar. Okay, very nice downtrend, lower low, broken lower high, another lower low, and right now we are forming another lower high, maybe somewhere around this area here. Okay, but weekly is a very, very clear downtrend. Going to the daily chart. Now, daily chart is exactly the same analysis as last week. This trend line is still respected. No change. So last week I drew this circle here. I mentioned that if we break above this trend line, maybe the market might want to retrace higher back to 128. We did not do that. Instead, when we hit this trend line, nice big bearish engulfing candle came back all the way down to support level. But interestingly, I mean, the daily has made a double bottom here. I mean, this descending triangle is going to a tighter and tighter spot. So something's got to give. Either we break a new low or we break a new high. But if you're basing on the long-term trend, whether it's still bearish. It's still bearish. And I just want to base on this example to tell you that if you are a trend follower, right, it's so much easier to trade. Okay? Because let's say if your weekly bias have been bearish, and the weekly chart has been bearish for at least 2 months now, all you're looking for is resistance to short. Now, if you're looking for resistance to short, look at the daily chart. Alright, look at how many times it gives you, give you a chance to short. We have a bearish flag here, hit a potential resistance around the 128 to 128.50, it came down. Okay, last week it tried moving up, hit the potential resistance level around the 126, and this trendline resistance, it came down. Okay, now again, it pushed up further on Monday. Last week, hit the potential resistance, came down. It didn't came down to the previous low, but it still came down. Okay, so I mean, if you just base on one bias and you're just taking levels to short, it's so much easier to trade, isn't it? And this is why I'm a big believer in trend trading. Again, there's not wrong if you like counter trend, but I'm just giving you a different perspective for you to be a better trader. Okay, so right now where we are now is this 125 level. It is a key resistance because of this trend line and this visual level. If it breaks, we are looking at further consolidation, maybe up to 126. Okay, but I mean, this is just a lot of the USD pairs are besides Aussie dollar, right? But other USD pairs like pound dollar, Kiwi dollar, Euro dollar is just a lot of consolidation for this few 1-2 weeks. Okay, if it breaks above 125, most probably it might go to 126, but we might just mark around this level here. Okay, so the 3 levels to watch out for are the previous low around the 123.50 level, this resistance 125, and the 126 level. Okay, so just if you're trading on daily chart, your mind need to be in consolidation mode because this is exactly what the market is doing. Okay, this for the euro dollar. I'm going to zoom into a 4-hour chart to see whether there's any other things that we can look at. Nothing much. Look at that. Just range bound. Just range bound. Nothing to do. Nothing to look at. Okay, just make sure you pick your support and resistance when you trade. Okay, so now let me see. Pound dollar. Okay, pound dollar weekly chart. Same thing, very bearish for the past 2 weeks, no change. Okay, I know that if you acted off the support, this support was around the 155, let's call it the 156 area. Okay, it bounced off and still bearish. Look in the daily chart, it looks exactly similar to euro dollar, isn't it? This trend line I drew last week, exactly the same thing. Now this trend line seems to be quite a key trend line to me. Was respected since August. 1 touch, 2 touch, 3 touch, 4 touch, 5th touch, 6th touch was a false breakout, 7th touch, 8th touch, 9th touch, potential 10 touch. Okay, key thing to look at is daily is make some kind of triple bottom here. Now it's testing a key level, trendline resistance, visual resistance around 1.58. If it breaks 1.58, okay, we might make a bigger consolidation, bigger retracement, maybe back to these levels around the 159 to 1.6 area. Okay, so longer term chart is still bearish, it's just that the shorter term, the daily chart is consolidating. Alright, so just pick your levels very carefully. Because let's say if you take a short here, okay, I would say, I mean, if you take a short here, it wouldn't be a nice high probability trade just because of how the daily chart has made triple bottoms here. But let's say if you take a short here, but if it breaks above 1.58, then you might want to think that the market might make a higher retracement. Okay, so daily is still bearish, weekly is bearish, momentum is still to the downside. It's just that use this trend line to guide you. Okay, because daily chart has made a bit of a bottom, so we'll see what happens. Of course, if it breaks a new low, right? Same thing for euro dollar. If it breaks a new low, the downtrend will most probably continue. But as long as we consolidate above, pay attention to the key resistance levels. What I like to do is I will put price alarms on my IG charts. So I will put alarms above this resistance 1.58. I'll put alarm below this 1.56 low so that I know these are the key levels I'm looking at. If it breaks a new low, for example, I want to be on top of it to try to follow the trend to the downside. Okay, so that's the pound dollar. Now, let me take a look at the Aussie dollar. Okay, Aussie dollar weekly chart. Okay, Aussie dollar weekly chart, same thing, downtrend. It broke a new low, I think, when was it? Last week. Yeah, it broke a new low last week. Interesting, I mean, Aussie has been weaker than most of the other dollar pairs because pound and euro dollar did not break a new low last week, but Aussie dollar did break a new low last week. So I'm more inclined to think that Aussie is a bit weaker. It broke a new low and made a new low for the year at around the 84.50 level. Okay, but weekly is still on a downtrend. Okay, lower low, lower high, lower low, downtrend. Daily chart, you can see that this was a consolidation triangle I drew last week and it broke downwards. Okay, so if you are a breakout trader, now look at this nice breakdown and look at how they pulled back and came down further. Okay, so it just, these are the live markets. It just shows how breakout trading based on my theories actually do happen in the market time and time again. If you look at the 4-hour chart, I'm just talking about this consolidation. I'm just talking about this consolidation area here, yeah, and how you could have taken it to the downside. Okay, so for example, you know that this was the low on the weekly chart and the daily chart. When you saw the candle break below the low, how you could have taken the pullback to short. All right, let me go to the 4-hour chart. Okay. So sorry, let me just draw my circles here. November 7, November 20th, okay. Sorry, I just want to replicate the symmetrical triangle on the 4-hour chart. Okay, here. I think it did something like this. Yep, this was a triangle, found it. Okay, so this was the triangle. Let me see whether we could connect further. Okay, no, let me just connect these 2 points. Okay, so this was the triangle that we're looking at, consolidation. Okay, so weekly and daily chart, we were bearish since a couple of weeks back, and we are looking for evidence to show that shorter term charts are confirming our bias. So the 4-hour chart was consolidating in the channel here and then came down, and then we were able to identify this symmetrical triangle last week. Now what happened is that it broke new lows, and look at how it pulled back to this previous support and resistance level somewhere here, around the 86 level. Okay, look at how it pulled back here. All right, now it made 2 pullbacks after it broke out. All right, I'm not going to talk just based on hindsight. Okay, let me show you how you could have taken this trade. But you need to be consistent. Your bias need to be bearish already in longer term charts, which we've established many times for Aussie dollar, bearish. If you're bullish, counter trend is a different trade plan altogether. I'm just going back in time and show you how you could have taken the Aussie dollar short if you were following my bias of being bearish for the past few weeks. Okay, so we know that the market has been consolidating in this symmetrical triangle. We know that it broke lower. Now, the first level that we could have taken a short based on the theory that I told you was around here. The breakout theory was here. This was the first level that can take it. Okay, now where's a reasonable stop loss? Now, because the swing here is, is really quite bearish. Some of you, so the previous swing is around here, and a conservative stop loss would be above here. Some of you might say that this stop loss is a bit high, probably. Then you might want to consider another level. Okay, you might be able to identify this swing here, and you can also put your stop loss somewhere here. A bit more aggressive, but it's still possible. Because if it goes down all the way here, and you take a short here and bounce back all the way up here, back to above this resistance level, then most probably you're wrong. So a stop loss will be either here or here. It depends on risk reward. Okay, but this is one possible place that you could have taken a trade, a short here. Fair enough, market went higher, you might have a bit of a unnerving moment for a few hours, but then after that it came all the way down again. Now, if your bias from the long-term chart is not strong, if you're not confident about your bias, a short-term rally like that might take you out of the trade. This is why I like to emphasize your bias must be strong. You need to know what you're doing, where's your stop loss, what you're trying to target. Okay, because a lot of traders, even though they short here, the thing shoot up like that, they get nervous, they get out, and then the market came down back to where their previous analysis was. And it can be very, very frustrating. Okay, so your bias needs to be strong. So this is the first level that you can take a short from. Now let me take away the drawing. Now the second level that you can take a short from was that you can wait for a more conservative pullback back to this previous resistance level on the 8650 and taken a short here. And for this case, the stop loss can be above here. Okay, because you're risking this, but maybe you're targeting a new low, is still at least 1:1. Okay, so you can take it here, you can take it here, but overall direction was still down. Okay, so just a bit of theory for you in the live markets. And interestingly, you can actually draw some kind of short-term channel here. Okay, resistance, resistance, resistance. Okay, I mean, if I'm being too long-winded, please tell me. I just want to be sure. I want to go, because trading is about the devil is in the details, all right? You can go to many seminars, they talk about general stuff, but for me, the devil is in the details. I want to go into specifics on how you take the trade, how you plan your trade. That is very important, all right? That is very important, because this is the daily thought process that goes through your mind when you are trading in live markets, okay? So I've tried to go as detailed as possible. So bear with me, and I hope you find it useful. So daily chart right now, it has made a new low. The key thing you want to look out for Aussie dollar is still bearish on most of the charts. This 85.50 level is key to me. If it breaks above it, okay, this is a good resistance level. If it breaks above it, then most probably we're looking at some form of consolidation. Okay, let me just delete this triangle, yeah. Okay, this 85.50 level is quite important to me. Looking at the 4-hour charts, still bearish, still making lower lows, lower highs. This is the level I'm looking at here. Okay, it has to break above that for it to be slightly bullish and consolidating. As long as we stay below this, I'm looking for it to either come down to test previous bottoms or make a new low even. Okay, but this 85 to 85.50 level is a very key level to me. Okay, so use this trend line here to plan your trades as well. This little trend line here. Okay, it looks exactly like pound dollar and euro dollar, isn't it? Is it amazing how all the dollar pairs look the same? Because if it hits this level, most probably it might come down again. Whether it breaks a new low or hit a double bottom, I don't know. But you want to look for resistance, good levels. Okay, this is Aussie dollar for you. Oh, hi, Puan. Thanks for coming by. Sure, pound Aussie. Okay, is Sunil here? Yeah, Sunil's favorite pair is Euro Aussie, right? I go through pound Aussie, Euro Aussie. Very interesting setups of that. Okay, pound Aussie. Let me just go through the pound Aussie at the moment. Okay, pound Aussie. Okay, pound Aussie. Weekly chart. Let's go to the weekly chart first. Okay. I was looking at pound Aussie and Euro Aussie very keenly for the past 1 week, 1.5 weeks, yeah. And based on the two setups, I prefer the Euro Aussie in terms of being bullish than the pound Aussie. I'll give you a bit of explanation why. But let's go to pound Aussie for Mr. Wu. Okay, so right now the weekly chart, okay, price action wise, we know that the market has made a series of higher high, higher lows here. So this was uptrend. And what happens is that the market made a lower low, lower high, lower low, and the market has reversed to the downside. But what happened next is the market made a higher high, lower high, and higher high, and we know that the market here is consolidating. Okay, so for uptrend to downtrend to consolidating. Okay, and what happened next is that it made a new low. So this might be a potential that it might want to come down further on the weekly chart. But after that, what it did was that it made a new high. So you have a series of lower lows and higher highs. So very, very mixed bags. Okay, because if you are doing this kind of price action, we can safe to say that the market has no direction, is consolidating, and we need to be very sure of support resistance levels. Now, what happened next is this: higher high, higher low. Now we need a new higher high to confirm that we are in a uptrend. And being a weekly chart, if you look back in time, whenever a weekly starts a new trend, it can last for a couple of weeks. And this is exactly what we want to look at the pound Aussie. The key level that we want to see is this resistance where we are right now around the 1.86. Okay. If it breaks clearly here, we shall see next week and during next week's webinar. But if it breaks this clear resistance, chances are a new weekly uptrend might begin. Okay, because the higher low is formed, right now we need a higher high. Okay, if it fails at this level, then the market is just consolidating. Okay, now look at the daily chart. Okay, daily chart, the swings here are a bit more bullish. I would say it's still overall consolidating a bit, but I'm just looking very keenly around this level. Okay, around the 185, or call it 185.80 all the way to 186. This whole level here is key for me on the higher term time frame charts. We need to break these levels here before we can confirm that longer term we are bullish. Okay, now so right now, right, the daily might mark around here, might come down here. If the daily chart does this, it does not mean that the weekly chart there's no chance to be there's no chance that the uptrend has changed to a downtrend, right? No. If the daily chart continues consolidating like this, the weekly chart, there's still evidence that it might push higher. It's just that it might take longer. But if the daily chart breaks this low, right, this low level here, daily chart breaks below here, then I'm more inclined to think that the market overall is still consolidating. Okay, we need to live above this trend line here. Okay, maybe let me just make it more precise for you. Yeah, sorry. We need to live above, I would say somewhere around here. Okay, around the 18320 level. You need to live above here for there to be a chance for a uptrend on the weekly chart. Okay, so this is a key level here. It needs to break this key resistance for the uptrend to continue. Okay, so looking at the 4-hour chart, still trying to push higher, Okay, but it's very close to resistance. It's very close to resistance. So if you are trying to take long trades now, your immediate target needs to be the strong resistance around the 185.80 to 186 level. It still can be an intraday trade, possible. Might not be the highest probability trade, but you just need to know where's the key resistance level. Okay, a high probability trade for me would be a nice weekly and daily uptrend or downtrend, and the price is reacting off a nice weekly and daily support or resistance. That's a high probability trade to me. Right now for this, weekly is still slightly more consolidating. Daily is on the uptrend by a key resistance. So if you want to take any trades right now, it's most probably an intraday trade or a counter trend trade. Okay, it's not the highest probability kind of trade. All right. I noticed a gap. Yes, there was a gap. There was a gap open this Monday morning, but nothing much to infer because the gap is quite far away actually. Nothing much to infer on the 4-hour chart. I mean, it might come down all the way back to a gap cover, which is why on the daily chart I say that it might, it might come down all the way back to this support level here. Okay, but depends on what you're planning. Okay, if it comes back to support, means this resistance is still respected. On the weekly chart though, this is a higher low area, so there's still a chance that there might be an uptrend. Okay, I hope that explains a bit more of Pound Aussie. Now I'm going to move on to Euro Aussie, just a quick one. Now the reason why I prefer Euro Aussie to the Pound Aussie for now, it might change throughout the day or throughout the week, but I'm just saying based on what I'm seeing right now, is because the weekly chart, you notice that the Pound Aussie did not make a new high, but look at the weekly chart of the Euro Aussie. There was a candle close above a key resistance of here. Alright, around the 1.4680 to 1.47. If you look at the previous swing here, this candle, we can consider it a close above the previous swing here. Okay, so this to me is a bit stronger than the Pound Aussie setup in terms of uptrend. So the market was making a series of lower highs, lower lows on downtrend. It made a new high compared to this high. So higher high, higher low, and we might be looking at a potential higher high somewhere here. Okay, I prefer the Euro Aussie, the Pound Aussie, simply because of how the longer term charts look like. And right now where we are, if you go to the daily chart, you can see that it has broken a lot of new highs here. These were all the resistance level, 146, 146, nice breakout. And right now we are trying to break higher. Okay, whether we can break higher, I'm not sure. We have yet to be seen, but I'm very keen to look at how the price action will look around anywhere between this level here. These are all potential support. Okay, right now there's a retracement to short-term support. If I see a bit more bullish momentum and a break of a new high, we can safely confirm that the weekly has been a start on the uptrend. Okay, I don't know what, I'm not sure the Sunil is here. Sunil likes to talk about Euro Aussie, but I'm just using two different pairs, Pound Aussie, Euro Aussie, to see which one's better. I hope you're able to understand what I'm trying to say. Yep. Is that okay, Mr. Wu? Any other questions you want to look at the Pound Aussie? Okay. Thanks. Okay, so Peter, you have a question. You use a lot of trends and resistance support trend. Do you like candles say? Okay, Peter has a question that I use a lot of support and resistance and trend in my trading. Do I look at a candle say hammer or hanging man to make entry exit decisions? Yes, I do. My bias, yes, I use a lot of price action and I study the swings on the higher time frame chart. I also look at candlesticks, especially on the higher time frame chart. So I mean, if you see, just looking at this Euro Aussie, I actually look at this candle. Weekly and daily candles are quite key. I mean, if you look at the weekly chart, look at when the weekly form a bullish engulfing candle like that, it normally continues a bit higher. So same thing here, bullish engulfing candle, it might continue higher. So weekly and daily candles are very important to me. For entry and exits, yes, I use candlesticks as well. Alright, in terms of sometimes measuring my profit targets and stop loss. Okay, but candlesticks are more of a I need to identify a bias based on price action and key levels first before I look at candlesticks. Okay, my price action and my support and resistance is still my primary top analysis first. Okay, candlesticks are just part of my tool bags that I use to confirm my trade. Okay, I actually use candlesticks, I use convergence and divergence on the MACD, I also use moving averages, and I use pivot points. So these four items here are actually my secondary toolkit that I use to confirm my trade. Okay, but the reason why I put a plain chart whenever I do my webinars is because I want you guys to be able to appreciate price action and support and resistance in the purest of form first, and be able to have that kind of thinking and that kind of mindset when you're trading before you zoom into the lagging indicators like your MACD, your stochastics, your Bollinger Bands. I'm not saying that those are not important. I mean, if you go to a John Bollinger seminar, for example, he uses Bollinger Bands. Or if you go to a Devil Guppy seminar, he uses his ribbons, his moving average. It's perfectly fine, but for me, the more important thing is forming a bias, knowing where the buyers and sellers are. Those two things are very important to me. Because if you do not know what you are trying to do, you do not know where the buyers and sellers are, all these lagging indicators will not help you. It will just make you more confused. Okay? Alright, Sunil, sure. Thanks for replying. Okay, okay, Mr. Wu has another question. Dollar Swiss. Okay. Alright, what looking for a level to long for the longer term is 95 to 955 level. Okay, so dollar Swiss. Now, dollar Swiss can be a good proxy for the DX, the dollar index. Okay, so whenever I see a dollar Swiss making a new high, most probably the euro dollar and pound dollar is coming down. Okay, so dollar Swiss weekly chart, quite similar to dollar index, just making a series of higher highs, higher low, very, very strong. However, right now we are facing resistance, key resistance around the 97 cents. Alright, you can see that the few candles could not break it. So I'm more inclined to think that the price might be exhausted. Alright, I'm not going to say that I'm going to short, no. I'm just saying that the uptrend is still there, but it's a bit exhausted. So let's look at the daily chart. So I'm trying to move a bit faster here because we're running out of time. But basically, a daily chart is consolidating to, let me just delete some of these lines here. Okay, daily chart is simply consolidating right now into this, something like that. Okay, So just be careful. Yes, it's still bullish, but just be careful if you are buying off all this short-term support. These are potential resistance that you want to look at. Okay, so this is what the daily chart looks like. Now, a good level of support you might want to look at is around the, let's see, 95, yeah, 95.50 to 95.80. Okay, these are all level of support here. I mean, this support is not bad. It's just that it's short-term support. This is not the best support. These are stronger support levels here, 195.50, 95.80. If you see shorter-term time frames confirming that the bulls want to come in again, here's good support to be bullish at. Of course, if it makes a new high, at least you're already in profit. If it breaks a new high above 97, even better. Okay, but yes, I think those levels are good support levels that you want to look at if you're looking for a longer term setup, because the daily and weekly is still on a very nice bullish trend. Of course, if it breaks through the 95.50, 95.80 level, then we're looking a bit more consolidation on the weekly chart. But on the daily chart, yes, those are good levels, good support levels you want to look out for. Okay. All right, moving on. I'm going to move on to quick one, the dollar yen, right? Just for those who are watching the recording, because a lot of people like to look at the yen pairs. Now, dollar yen. Now, a lot of the yen pairs has just been one direction. Okay, bullish. That's about it. Look at the weekly chart. There's nothing much to analyze. Bullish. Some people like to say resistance at 120, 122 possible, but as long as if I don't see any long shorter term reversal, I wouldn't call it resistance yet. It's still very bullish to me. Daily chart, you can see that it's a bit tired. Okay, it still made a new high though. Having said that, it still made a new high last week above the 118.50. Right now, it's still bullish. It's still bullish. Okay, the only thing that I can infer is on the 4-hour chart, whereby it might make a bit of a consolidation. So, first level to look at a dollar yen is around this level here, 118. Okay, it's a support level. It was respected once. I'm not sure whether it can make a push to a new high from here. But basically, we're looking at 118, if not back to the 1175 level. Okay, so short-term charts, if the resistance, the resistance is still respected and no new highs are being made, take out a drawing tool, try to draw your chart patterns, because most probably it is trying to form a chart pattern or trying to consolidate some kind of pattern. So just look at 11750, 118 for consolidation. But if you're bullish, always remember to take it at key support levels, all right, and measure your risk to reward. Okay, so this is the dollar yen for you. I think I can even draw another trend line here. Yep, this is the second trend line for dollar yen. So 118 is a key support, 11750. All right, it's still bullish. It's still bullish on the dollar yen. Okay, so that's it. Let me move on to commodities before I wrap up. Now, gold and silver. Gold and silver. Okay, now, Xiulin, right? You asked for gold and silver. Most definitely, I'd like to cover this in detail because this is a very typical chart that can mess up somebody's psychology. Okay, especially if you're not sure. Now, gold weekly chart. Now, I have been a bear on gold and silver for the past few weeks, especially on silver. Okay, when silver broke 1850, I was bearish. It came down all the way to 1516. When gold broke the 1180, broke the 1200 level, I'm bearish as well. Okay, now what happened is this. Weekly chart, look at this candle here. Okay, look at this candle on the weekly chart. This candle here is a candle close below all these support levels here. So I'm more inclined to think that we are bearish on the downside. Okay, these candles here. Okay, so these two candles here have made me inclined to think that we are actually more bearish than bullish. So let me just take this away. Okay, so when this candle here broke a new low, I was bearish. So I was waiting for a retracement back to this 118 or 1200 levels before I hope that the bears will come in again. Okay, but what happened here, around here, let me just zoom into the daily chart. What happened here was that the market just made new highs on the daily chart. Okay, so this is where zooming into a lower time frame to plan your trade is important, because even though I was bearish around this level, so anywhere I see weakness on the daily chart, 4-hour chart, anywhere here or here, okay, or here, I'm very happy, because if the daily chart starts falling off from all these resistance levels, the weekly chart is confirming. So both daily and weekly will be bearish. So I was quite happy when the daily chart on Monday morning dropped. Alright, I think on Friday it dropped to 1180 and then closed below 1180. On Monday morning it continued down to 1140. So I was quite happy when I saw that, because I know the Swiss referendum played a part, but I was really happy because it confirmed my bias on the longer term chart. So when my longer term charts confirm my daily charts, very good. Okay, the trend can be sustainable for a long period of time. However, now, after I saw this bearish drop on Monday, right, I was looking for a nice level to try to take a pullback, to try to take it down. Okay, this way I zoom into my 4-hour chart. Okay, and I was looking maybe a pullback back to the 1170 or 180 level, basically evidence that it might want to drop from those levels. So I was just waiting, I was just stalking it. Okay, but what happened, as we all know, that when it hit 1150, okay, there was a big green candle form. Okay, and I was still stalking it. This was a key level. This was where I'm looking at bearish bear traders to come in, and I was thinking of joining the downtrend. But when the second candle appeared and it made a big green candle 4-hour chart, I was a bit more cautious, because this is where I think this is where market participants push it up all the way back to the previous resistance of 1190, 1200. And this shows that the gold right now is very, very mixed. So I'm more than happy to step aside and see what happens. Okay, now a lot of traders, right, let's say they took in a short. Let's say they followed my bias bearish and they took an aggressive short around here. Stop loss above the swing high. Monday morning, the markets came down. Wow, very good profit. It's very happy. Maybe you can pay for your year-end holiday to Phuket or something. Okay, and they are happy to, you know, keep it open, hoping it will make new lows, you know, no stop loss and things like that. And then the next thing, when they open the chart, they saw the whole thing completely reverse. And from a nice big profit, it becomes losses. And it's very, very bad for the psychology, isn't it? Because one side you are so happy because you're earning profits, and then immediately the whole thing reverses. And what I know some clients will do is that they will continue trying to short at these levels, because they do not want to let go of their bias. They did not want to let go of their previous trade plan, and they're not flexible enough to think that, hey, the market is doing opposite of what it wants to do. I want to step aside first. No, they want to continue shorting. It's a bit of an ego thing, I would say. So, holiday gone. Yes, it's a bit of an ego thing. So what I'm trying to say is this. We need, as traders, right, we need to always remind ourselves the market is random. The market is random. The market is random. Okay, it can do whatever it wants. But what we can control is our strategy, our trade planning, our psychology. These are the more important factors. Okay, because the market can do whatever it wants. Now, I know some of us might be finding reason, oh, why did gold bounce up so aggressively yesterday? In fact, I was scratching my head as well. I was talking to my market strategist Ryan and said, quite weird for the gold to retrace so high, especially since the trends are so bearish, right? I mean, the only things I was able to find on CNBC or Bloomberg was that, oh, oil make a dead cat bounce. Traders are doing a lot of profit taking, short covering, and that's why gold rebounds back. So, but it doesn't give me much as a trader. It only gives me a bit of information, but that's about it. But as a pure technical trader, when I see some kind of rebound like that, I need to tell myself, okay, my bearish might be wrong, but or my bearish outlook might be wrong, or it might be right. I don't know yet, but the key things I'm willing to step aside to re-access the trade. Okay, so let me go to the weekly chart right now to see where we are. Now, the gold chart is still on a downtrend. It will only reverse on the uptrend when a previous high is broken. Where's the previous high? Here, around the 1240 level. If it breaks above 1240 level, then we can safely say that, okay, gold has reversed to the upside, or it might consolidate. Right now, this trend line still seems to be respected. Okay, still seems to be respected. If the weekly candle closes like this, then it's a bit more consolidating to me, because One big red candle, one big green candle. This is called a railroad tracks candlestick pattern. So it might be a reversal pattern. I don't know. Okay, but I cannot. I need to be flexible enough to say that, okay, maybe my bearishness might be wrong for now. I need to reaccess it. So this big green candle is a bit of course concern, especially if you're bearish like me. Okay, but I'm willing to step aside and see what happens. But this trend line is still respected. As long as this trend line is respected, as long as we stay below the 1250 level, I'm still more inclined to think that the gold might consolidate a bit. All right, so the daily chart, you see a daily chart, look at the retracement. Now, how confident are you if you are bearish to take a short like that on this bullish candle? Okay, you need to have really, I don't know, crazy confidence, but I'm not a fan just because of how this candle looks like. Okay, it's very mixed to me. I don't like it. I'm not happy that it does that, but the market can do what it wants to do. Okay, and I do not want to be emotionally affected by it. All right, so gold, I'm still bearish, but right now, based on how the price action has formed for the past, from yesterday, I'm taking a step aside to see what it wants to do. It might consolidate. Okay, it might consolidate. Yes, Mr. Rama, you're correct. Another bullish candle break above the trend line, break above the 1240, 1250 level. It might mean a reversal. Okay. However, having said that, if you look at silver, there's a bit better case to be bearish still. Because if you look at the silver weekly chart, okay, the silver broke a key level first. Remember, silver broke, I think if you go back to my previous webinar, it broke the key level of 1850 1 month before gold broke that key support level. So silver, we are living below that support level right now. This weekly candle might seem that it might want to consolidate or make a high retracement, but silver weekly is still quite bearish. Okay. Now on the daily chart, again, you can see this big green reversal candle. I really don't like how it looks. I was very happy when it came down on Monday, hoping to take a retracement, but now it just stays above here. So this trend line is something to look at. I think it seems like you might want to break above. Okay, I'm just keen to look at this level for silver, the previous high around the 1680. If we break above the 1680, above the 1700 level, then I might think that it might make a higher retracement, maybe back to even the 1750 to 18. But we stay below here. If I see some form of weakness, then the weekly trend might continue to the downside. Okay, but this is a classic example that as a trader, keeping your psychology in check is very important. That's number one. Number two, as a trader, you need to have a very flexible mindset. All right, if you see somebody, or if you talk to your friends who's a fellow trader and he comes in to say that, oh, I'm dead sure that euro dollar will go to this price, or the silver is guaranteed to go to 1,000. Don't listen, because there's no guarantees in trading. It's very bad for psychology. All right, always be flexible, always think in probabilities. Right now, based on retracement candle, it's good to step aside and reaccess. All right, so that's what I'm saying. So I'm a bit more neutral on gold and silver right now. Still leaning towards the bearish side, especially on silver. But in terms of short term charts, it's a bit conflicting to my longer term bias. So I'm willing to take a step back and see what happens. I don't know. Let's see what happens in my next week webinar. Okay. So that's Sunil has to say, is it the year-end phenomenon for gold? I don't know. It might be, it might not be. There's this Indian festival whereby gold price typically goes up because a lot of people buy gold, right? I'm not sure whether you guys heard of it. I'm not sure which month is that. I mean, there's always all this theory in terms of the Santa Claus rally, or a sale in May or sale in October. I'm not a keen follower of such theories. For me, I just follow the charts. Okay, it might be year-end phenomenon. I don't know, but it's just how it reacted yesterday. Make me, make me a bit more neutral in terms of gold and silver. Bearish neutral, I would say. Okay. Sunil, you're saying that if you look at last year, it shot up as well. Okay. Thanks for that heads up. Last year, is it? Okay, we don't have much time, but yeah, I mean, it might be. Maybe, but I mean, it is what it is right now. It made a big bullish candle, so I need to wait and see what kind of price action happens after this, and maybe next week we have a better outlook. Okay. All right, it's time. I need to wrap up the webinar right now. Again, thank you so much for your attendance. All this is being recorded. Again, any questions, please feel free to ask. I think it's the best way to learn during the live markets. Okay, so hopefully you attend the webinars and ask as many questions as possible. Okay, live markets are the best place to learn trading. I try to go as in detail as possible, and I hope that you all benefit from it. All right, if not, thank you. Have a great week. Happy trading. Thank you so much. Cheers.